Good morning and welcome to this Wednesday, November 6th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, it was another record breaker on Wall Street, at least on the Dow Jones Industrial Average. Let's take a look at what's going on. You can see that the Dow did finish slightly higher yesterday. 27,492, a new all-time record high. The S&P 500 pulled back a few points, still not much considering the huge advance that we've seen really over the last 30 days or so. The NASDAQ was able to move up slightly higher to another all-time high, up about 1.5 points. But look at the small caps. We're going to talk about them a little bit later in the show, but you can see the small caps breaking out to a short-term high here. 10-year Treasury yield down today. It actually down 4 basis points. Futures a little bit muted. Futures, well, of course, we've had a really strong run in the market. Futures are up this morning, but not much. Part of it is the fact that we are seeing money rotate a little bit back into the defensive treasuries. Again, the yield down 4 basis points to 1.82. As far as the sectors go, financials leading yesterday. Just a slight leadership, not any kind of a huge move, but overall, the last month, you can see this has been very strong. This is another group we're going to talk about quite a bit later in the show. Consumer staples rallying yesterday. It's been under a little bit of pressure while the market's been going higher. Some of the defensive groups really not in favor as the market breaks out. But staples did recover off of earlier lows yesterday. Still, the overall trend remains higher, and that's the important thing. Industrials like financials taking over in terms of leadership, breaking out to another new high yesterday. Very, very strong action in the industrials. We'll talk about that later. And then to the downside, utilities and real estate. Again, it's the defensive groups. Real estate, a darling 2 weeks ago. Now that the S&P 500's broken out and is trekking higher, real estate being shunned by traders and by the market in general. All right, as far as the 10-year Treasury yield goes, I wanted to give you a long-term view. And the reason I'm doing this, you can see this 20-week moving average. We have been below this now since December, early part of December of 2018. So it's been almost a year that the 10-year Treasury yield has lived below this 20-week EMA. I say that because the last 2 weeks we have been threatening a break back up above it. When the yield is on the move to the upside, that is typically when we see some of the best action in the market. That certainly was the case. I'm going to go back a little bit here just so you can see. But when we broke out in November of 2016, part of that was money rotating in a very, very big way. You can see October and November. See how we had been trading below the 20-week moving average on the 10-year Treasury yield? And then once we started getting above it, and then we made this push, that coincided with not only a huge move in the market to the upside, but it coincided with a huge move up in relative strength for both financials and industrials. So that's one thing we have to watch here as we get this move. We've been seeing shifting kind of a tide from certain areas of the market to others. And again, we'll talk about that later in the show. I've got a lot of interesting charts I want to show you. But this is kind of a precursor to that. When yields start moving up, it just changes the dynamics in the environment of the market. And so we need to be aware of that if we, in fact, do make this breakout. I've been saying 190. That was that reaction high back in September. Clearly, if we get through that, we're going to be above that 20-week moving average. Then I think this rotation that we've seen into financials and industrials, it could just be beginning. I know, you look at some of the charts, you look at some of these banks that have gone up so much here in recent, last 2 or 3 weeks, especially since earnings started coming out. It could just be the start of something much bigger. And so I wouldn't shy away from groups just because they've gone up quite a bit the last couple of weeks. Excuse me. On a relative basis, they have not performed well for a couple of years. That's the bigger story I think we need to take away from this. Okay, so that's the economic analysis, at least looking at the Treasury market. There was one economic report out this morning, came out at 8:30, and that was on Q3 productivity. It did come in below expectations. It was minus 0.3%. The market was expecting plus 1.0%, so a little disappointment there. Okay, how about earnings? We had a bunch of earnings out last night. I'll tell you, today and tomorrow, there are a ton of earnings reports, not the big names that we see in the middle of that we saw in the middle of October, you know, in those first couple of weeks of earnings season, not the big tech names, but it's like the second tier. There are a lot of companies that are smaller. I like to think maybe that their accounting departments aren't quite as big, so they can't get the numbers out as fast. But a number of second tier companies are reporting, a lot of them today and tomorrow. I think maybe about 800 between the 2 days. All right, so let's take a look at some of these charts. First one I wanted to talk about is microchip. A lot of the semiconductors have done extremely well after earnings. Microchip reported. Numbers weren't very good, to be honest. They were just kind of so-so. We've seen a lot of blowout reports in the semis. And when you look at the relative strength, and I think I talked about this on one of the shows or maybe in one of the webinars recently, I wasn't really impressed with what's going on with microchip relative to the semiconductor group. Semiconductors have been very strong. Microchips just kind of been a little bit less than average. So it's been able to steadily outperform the S&P, but it's been because of a very strong group, not necessarily very strong fundamentals within the group. If there was one positive, I would say back in early September, seemed to be some accumulation taking place. Nice movement into the earnings report. But if you noticed yesterday, we had a breakout intraday, an easy breakout, and then we came back down and closed near that resistance area right around 100. Microchip missed on their top line, 1.34 billion versus 1.35 expected. Bottom line, I show 143 versus 143, so they matched, and they guided quarter three lower in an environment where a lot of these semiconductors have been guiding higher. The stock, surprisingly to me, only down 1.87% in pre-market. Maybe that has something to do with just the fact that the semiconductors are strong, and even if this company is underperforming, maybe there are a lot of folks out there thinking that we're going to still make a big push to the upside in the group, and therefore microchip will follow along. I don't know. Watch that 20-day moving average. In a strong semiconductor group, microchip shouldn't fall back and close below there. One big disappointment was ATUS, Altice USA. This is one that I actually was expecting a pretty good report, and I think the charts would back me up on this, but they literally shocked Wall Street, and I think I saw 3 or 4 downgrades of this stock this morning as well. So you can look at the relative strength. And what I say a lot of times is, even though this gives us a lot of positive clues, there is absolutely no way we can tell if a company has been forthright with Wall Street. So when I see a relative strength line like this, where a company is trading at a 52-week high to its telecom equipment peers, and it's been this kind of a rally, I mean, it's not just a little slow rally on a relative basis. It looks like this company's been outperforming for quite a while. I looked at the volume trends. Everything looked good. This one I featured as a stock I thought could perform really well going into earnings. But they missed on their top line, 2.44 billion versus 2.48. They matched their earnings expectations at 12 cents, and then they guided fiscal year 19 revenues lower. And when you're in a group that is already downtrending and is an absolute horrific performer relative to the S&P 500, and you're being held up on a pedestal, you don't need any bad news. And I think they got plenty of it. The stock is down over 16% in pre-market action. Going to be a test to see whether or not it can come back up maybe and reclaim that 50-day moving average. But I do not like it when a company is trading solidly into earnings and then completely pulls the rug out from under Wall Street. Wall Street has a very, it has a pretty long-term memory when it comes to not being able to trust management. So I don't like it when a company reports like this. Next up, MTCH. This is the match group. They did beat top line and bottom line, but they guided quarter 4 revenues lower. So here you can see the stock's been trading down. Look at the volume on the way down and look at the relative weakness. The group has been weak. You can see that the group relative to the S&P 500 has been tumbling for about 10 weeks. And Match relative to the S&P 500 had moved to about a 6-month relative low. Relative to its peers, it was near about a 3 or 4 month low. Numbers weren't too bad, but they guided lower, minus 13% pre-market action. A couple of big names out this morning. CVS Health. Look at this uptrend. Been in a downtrend for a while, now uptrending. Look at this versus the pharma peers. CVS has been pretty good. Well, they beat on the top line, beat on the bottom line, guided fiscal year 19 earnings per share higher. Stock is trading up 2.7% in pre-market action. Humana, and by the way, some of these pre-market numbers I'm giving you are from probably 10 or 15 minutes ago, so they may have changed a little bit. In the pre-market and in the evening after market, sometimes liquidity isn't that great, so you can get some pretty significant moves in a short period of time, so you want to check that. Humana reported they did beat top line, beat bottom line, guided fiscal year 19 earnings per share higher, also up about 2.8%. Stock had been downtrending relative to its health care provider peers, but the group had actually started to strengthen here in October. We saw a little bit of relative strength in October from Humana, and then obviously getting a pretty good report here. We get a breakout and an open. Well, I'd actually like to see a close above about 310. That would be that high back in February. That would send us to a 2019 high. And with money beginning to rotate into different areas, this is certainly worth watching. Humana seems to be picking up and more into an uptrend now. A couple of other random reports. Insulet, ticker symbol is PODD, P-O-D-D. This is one that I kind of went on a flyer a little bit with. I like the stock heading into earnings. They had beaten their earnings estimates in the last 5 quarters. And after a big gap up in August, you can see the stock prior to earnings was trading around 117. And after gapping up with earnings and just another 2-3 weeks later, we were all the way up to 168. We put in a double top. We'd been pulling back for the last month, maybe 5 weeks, but we hadn't lost that gap support. I thought we were just consolidating. You look back at the May reaction to earnings, big move up, same thing in August. I don't know. After pulling back, I just had a feeling this one was going to do well. It's in the medical equipment groups, which has been okay. It hasn't broken out, which means on a relative basis, it's actually been dropping versus the S&P of late. But POD relative to the group was still, I think, in an overall uptrend. And so I thought that maybe we'd see some positive numbers here. They missed on their bottom line, 1 cent versus 5, but they did easily beat on their top line, 192 million versus 179. They guided fiscal year 19 revenues higher, stock up 3.6% pre-market. DVA, beat on the top, beat on the bottom, guided fiscal year 19 revenues and earnings per share higher. Stock has been trending higher since bottoming versus the healthcare providers group about 5 months ago. This is one that I think looks pretty strong. They are up 7% in pre-market. So I want to see how they react after they gap up, but I suspect any kind of a pullback down the road, DVA is going to look interesting. Really nice report there. ICHR, this is another one I had talked about in a webinar that I liked going into earnings, and you can certainly see why. Big breakout here, huge volume coming in during this breakout. Just seemed like there was a lot of accumulation. Relative strength looked good, and here we are in the semiconductor space, which has been incredibly strong. A lot of solid reports in that space. ICHR beat top line, beat bottom line, guided Q4 revenues and earnings per share higher. Stock up 3% in pre-market. One other not so great report, lumber liquidators came out. Another big miss. You can see the company took a big hit back in September, had been going sideways for a while. Look at the relative strength, or in this case, relative weakness. Lumber liquidators versus the home improvements group, right down near a 52-week low heading into its earnings report. Wall Street's telling you be careful. A lot of the volume to the downside was heavy. Back, when it was trying to consolidate, very light. Well, they dropped another bomb. Revenues, $263 million versus $276. The earnings per share, 8 cents versus 23 expected. Stock down another 8% pre-market. And by the way, they guided fiscal year 19 revenues lower as well. Stock just can't seem to catch a break. I think it's heading back down to test this low that we saw back in early August. All right, that's what I had for earnings. Let's talk a little bit about upgrades and downgrades. Had a couple of these. Actually, we have a bunch of them. I just tend to pick out a few. Try to keep it different. Try not to look at the same stocks every day. First one, BlackRock. This is in the asset manager group. Talk about changing times. I'm going to talk a little bit more about this different areas. Asset managers, I don't know if you noticed, broke out to a 52-week high yesterday. And BlackRock on the verge, actually looks like it did actually make a breakout on increasing volume. So the stock getting upgraded, probably after a lot of accumulation taking place. But this is a stock that's showing a lot more improvement. The group has certainly shown a lot more improvement. It is now at about a 5.5-month relative high to the S&P 500. So again, financials, industrials, you're going to start to see this theme more and more. And if the treasury yields keep going higher, it's not going to stop. Financials and industrials are very, very, nothing's a guarantee. But when yields are on a move to the upside, financials and industrials tend to do very well. Next up on the upgrade list, PLD. Prologis, big uptrend, had pulled back down around the 50-day moving average, getting an upgrade. I'm okay with this one. I think this has been a pretty good relative performer. Don't know what the new, actually, I think that might have been earnings. I'm not sure if that was earnings or not right here on the pullback. But anyhow, I think the overall uptrend remains in play. I'm okay with that upgrade. And then we got Tenet Healthcare, THC. Nice breakout here the last couple of days, volume exploding to the upside. And you can see we've marked a relative bottom about 3.5 months ago and in a steady relative uptrend versus its peers. And its peers are strengthening. I agree with the upgrade. Groupon, downgraded. Stock, big hit back in August. Reaction high, hasn't been able to get through about the 3,305 level. Had a nice little rally last couple days after gapping down yesterday, came rallying back. Can't get the breakout though. Relative basis, it's been strengthened the last couple months, but there's still a lot of overhead work to do. I think I'm okay here with the downgrade. Mosaic, MOS, long-term downtrend. Stock has been trying to strengthen, but again, look at the relative weakness. I agree with the downgrade. Got to see more out of that one. Vishay, VSH, nice push to the upside, heavy volume coming in. I think it's been a really nice relative performer the last 5 months. I would say a downgrade sometimes is an opportunity, and in this case, it would be an opportunity to me. If you get the stock back down close to that 20-day moving average, I think you will see a rebound. I disagree with the downgrade there. Okay, we will move on. I talked about changing times and how I wanted to talk about a lot of different stocks. Well, I want to talk about a lot of different groups as well. First thing I want to do is show you the relationship of the growth stocks versus value stocks. So I'm going to look at the Russell 1000 growth versus the Russell 1000 value. The volume really isn't showing us anything there. Let's get rid of that. Candlesticks. On a relative chart, I always like using a line chart. So let's do this, and I'm going to go back a ways. Let's do weekly, and let's go back 10 years so you can get a feel during a bull market what happens. So the Russell 1000 growth, when this line is going up, growth is outperforming. When the line's coming down, value is outperforming. So back in 2011, we had some nice growth stock winners, and then we went through about a year period where value was the better play. Then growth, a little bit of pullback, and then growth for a couple years, value for a year, growth for 20 months, value very briefly for a couple of months, growth for 9-10 months, and now it's been value. These last couple of months, money has really been rotating away from growth and into value. We saw it in the fourth quarter of 2018. It didn't last long. We saw it to a lesser extent back in May. Didn't last long. The question here, and I'm kind of watching this area down here at around 123.5, 1.235. Your 50-day moving average is 124, actually just a little bit below 124. But if we come back down and take out these two lows, I think moving down once and holding and then moving back up is fine. But I think if we move down, bounce a little, and then move down again, I think we have to be careful. Very similar to what happened over here in 2015, 2016, where we pulled it back, went up, pulled back, sideways consolidated, and then fell. I think if we break, similar to what we did back then, we could see this push again in value stocks for a little bit longer period before growth comes back into play. And I do believe growth is coming back. I just don't know if it's going to be back here in the next 3 to 6 months. You know, if we've got the changing dynamics with the yield moving higher, I think there's going to be a focus on some other areas of the market. Like I pointed out, asset managers breaking out, banks just breaking out, life insurance breaking to a 3-month high. And I'm going to talk about some of these groups in just a second, but that's what's kind of shifting the theme here in the market right now and is really taking a toll on a lot of growth stocks. All right, got a lot of other charts I want to go through, so let's see if I can get through these pretty quickly. Transports. I'm going to show you a weekly chart here, and I'm going to go back a little ways. What you'll see here is a lot of tests of 11,000, and we've been above 11,000 intra-week without being able to close there. Right now, we're at 11,050 after getting as high as 11,161. This is going to be important because when you break on transports, and I've talked about this a lot, when you finally get that break on transports, that's what absolutely drove the S&P 500 crazy to the upside late 2016 and throughout 2017. When we had that huge run to the upside, it was transports. Look at what transport's been doing for 2 years. Not a whole lot. I think they're going to explode. I think the S&P 500 is going to explode, and this is one thing to watch. Russell 2000, IWM, same thing. And also it was the same thing back in 2016 when we broke at the end of 2017. Look at what happened. Small caps led. We are right on the verge here on the IWM. Keep an eye on this one. The XLI, I'm going to look at this from a 10-year perspective. And I just want to point out, and actually before I even do that, let's go back and look at the transports. I want to show you something that's kind of interesting when we annotate these charts. So if we go to the big lows back in 2011, 2016, and then 2018, check out those lows. Perfect trend line. The exciting part, if I drag this up here, because I think we could potentially be in a channel, I could see us going way up here. I don't even know what that number is up there, but it might be 13, 14,000. I could see something that impressive happening over the next year to 18 months. I would not be surprised at all. If we take a look at the IWM and pull this chart up, I'm not going to annotate to save time, but you can kind of see that same thing. Get this breakout. We could see a big push in small caps to the upside. XLI, all right, the 10-year. Here is again, this low right here actually would not quite touch that trend line, but look at the sideways consolidation we just broke out. XLI looks awesome. How about XLI relative to the S&P 500? We'll update, but we don't want the candles. See how the candlesticks just kind of make it all just jumbled. So I don't need the volume. Whoops. Change this and now update it. And let me annotate this for you. It's pretty cool as well. So right here, if I connect these lows, you will see basically that the relative strength of the XLI is just turning up off of this multi-year test of the trend line. And once again, if you were to drag this and all of a sudden we start to see outperformance, this is, kind of what we could be looking at. I don't know. We probably go all the way back to that. Yeah, there we go. And then kind of drag this out here, something like that. But we could have a lot of outperformance in industrials, transports I was just talking about. So this is something that I think is pretty exciting. How about the financials? Look at the same chart. Financials relative to the S&P 500. And what happens if I connect these lows? Well, pretty much right on cue. And look, we are now just at about a 2019 relative high on the financials. And again, I could take this line, drag it up here, and you could see a lot of room to the upside. And you say, well, it's never going to get way up there. Well, did you think it was going to get way up there back in 2016? When when you're in favor for a while and the money rotates that way, there's a reason for it. It's probably because the economy is going to line up for these companies. They're going to begin to show much better revenue and earnings growth, and they're probably going to be leaders as we go forward. So some things to keep in mind. Last thing I wanted to show you here before we get into 3 you must see is just wanted to pull up the bank. Actually, I just want to have the banks by themselves. But when the yield starts rising, look at the banks breaking this downtrend line, getting above the 2019 highs. It is really taking off to the upside. Looks kind of similar to what we saw back in 2016 when we started this move, broke this downtrend line. See this downtrend line, broke it. Got this downtrend line over here, broke it. When they're in favor, you don't want to ignore them. You don't want to sit there and say, well, you know, they've gone up too much, I'm going to wait. A lot of times you end up waiting and the rally ends. Excuse me, and you wait and the rally keeps going and never gives you a chance. Never does come down far enough to get you in. So just keep that in mind. I think going with leaders, I don't like to chase, but at the same time, I don't want to get left out of a rally. So got to kind of weigh both sides of it. All right, let's go into the 3 you must see. I have a few stocks here that I want to show you. And the first one is Sally Beauty Holdings, SBH. I believe they report their earnings. They do tomorrow morning. They report, and I'm going to show you on a relative basis. The stock had been in a downtrend. Look at the volume coming in September on this push to the upside, sideways consolidation, been bouncing off the 20-day moving average, rising. Relative strength has been building for the last 4 months. Doesn't mean that we're going to have a great report, but I think it improves the odds. So I just wanted to point out a company that I think looks kind of interesting heading into its earnings report based on the fact that we've got the specialty retail group breaking out at least to a 3-month high. Before you get too excited, though, remember the S&P 500 is breaking out. So when you see this break out to a 3-month high, keep in mind we're nowhere near the prior absolute high, and as a result, we have been downtrending on a relative basis. So specialty retailers have not necessarily been in favor here, even though we're starting to see some strength. So if SBH does come up short, they could get hit pretty good, being in a group that's not one of the favored. So that's something to consider. Could go either way. I just think that SBH is at least setting up pretty strongly within its group. Next stock, and this one has been in a pretty good uptrend. It is one of the leaders, and it's in the semiconductor space. Brooks Automation, BRKS. They report tonight after the bell. A lot of these semis are getting a lift with earnings. Obviously can't guarantee you anything, but I do think that Brooks could come in with a strong report. Relative strength has been building throughout this quarter to the upside. We're not at a 52-week high like some of them, but we have been seeing it build. You can see the company relative to the S&P has broken out to a new 52-week high, and a lot of that is simply because of the rising tide lifting all boats scenario. Semiconductors have been incredibly strong on an absolute relative basis, but this stock has made a pretty good move and on some pretty good volume. So I think that there's a good chance BRKS has a nice report tonight. And the other thing you have to worry about is even if it does have a great report, they beat top and bottom line, they raise guidance, sometimes stocks still sell off. So that's what makes it so hard with earnings. The final one, though, I wanted to talk about, and I wrote about this a little bit in my blog earlier today, REGN in the biotech space. First of all, check out the biotechs all of a sudden the last month catching fire. What I wrote about in my blog is that 2 groups that really take off, when they take off, semiconductors, biotechnology. When the group goes and makes a breakout, you want to be a part of it. I mean, just hang on by your fingernails because it will drag you up. But REGN came in yesterday, beat top line, beat bottom line, and look at the volume, the biggest volume of the year, breaking out above all of this other resistance. Maybe we get a little bit of short-term pullback, but this one is looking to me like it is beginning to trek up. With the earnings, it moved to about a 3.5 month rep, maybe even, I don't know if it took that level out, but it could be as much as a 5-month relative high. Now, biotechs have started to strengthen. If that continues and you get a leader, it could be a big, big move to the upside. Well, let's go ahead and just leave it there. I like the stock on a short-term and longer-term basis, and we shall see how it goes. Want to thank everybody for joining me today. Everybody have a great day and happy trading.